Good evening, ladies and gentlemen. A very good evening to you, afternoon to you, wherever you may be. Very quiet market. Oh, it's trying a little push, but it's a little bit quiet. I don't know what you guys are trading at the moment, whether you're focusing on something specific, but it feels like the wind's been knocked out of its sails a bit. Tonight, I'm going to talk about overtrading, something I think, if you haven't yet, you're going to fall into overtrading trap. We do it as traders, natural as humans, we're human beings. And I'm going to kind of give you some tactical ways that I think, well, I've found that valuable for me, and I know that other people have found valuable as well. So it's going to be very tactical this evening. I'm going to talk through some of the kind of mindset stuff, and then some actionable things that you can actually do to help you if you do struggle with overtrading. And we'll define it, we'll do all sorts of stuff. So by the end of it, I'm hoping, in fact, I know that you will have some stuff to go away, and if overtrading is creeping into your trading, then you will have some tactical ways to fix it. And I'm going to go run through a few, right? You know, some of them will resonate with you, some of them won't. And that's the name of the game. That's why I try and give you, as much different variety as possible, and you can pick and mix as you like, pick and choose as you like, pick and mix, pick and choose as you like, and take away the one that you think works for you the best. Okay, so disclaimer, usual stuff. Spread rating, CFDs, complex instruments, and it's risky. Trading generally is risky. We know this. If you don't know this, please read that. If you do know this, you know the game. All right, let's go. Before we get started, I want to mention, guys, looking at my other screen here, that Pepperstone are doing a Pepperstone Talk streaming event coming live from Dubai on Thursday, 2:30 p.m. GMT, I think it is, till 5:30 p.m. GMT. They're going to send you an email out. If you got on this via an email, they'll send you an email. So check that out. There's some interesting guys there, and one that stood out for me is a gentleman, I'm probably butcher his name, Baz Kujiman. Maybe I've completely ruined that, but the topic is interesting, trading the Renko. Renko charts are something I don't really look at much, and that's just a different way of kind of framing things rather than going 3 minute, 5 minute, 15 and stuff. It's just a different way of looking at things. So it might be interesting, if you're curious about kind of filtering out time element and just looking at that, that's one of the interesting topics on there. And there's other guys in there talking about, maximizing your investment potential, trend trading, that type of stuff. So emails coming through, check it out. If that's your thing, it'll be live streamed on Thursday. Okay, one last little thing. Traders Mastermind daily email. This is interesting. I'm doing a free daily email at the moment. It's an insight and it's a resource. So it's something that I think is going to help you keep your mind centered and focused on discipline, motivation, all that type of stuff before the trading day. And a little resource that I've handpicked off the internet. Could be an obscure article I've seen on a blog I really got value from, podcast episode, video, and I send those out every day before the market opened. And I think you'll find value from it. I think you will find value. So check it out, tradersmastermind.com, top right. Click on daily email if you haven't yet. The feedback's been great for those of you who have been on it. So yeah, there we go. Okay, let's get going. Unleash your trading potential, overcoming the threat of overtrading. I like to do a stoic quote, as you know, if you've been here before. And if you haven't, very welcome. If you have, also very welcome. Remember, it is not enough to be hit or insulted to be harmed. You must believe that you are being harmed. If someone succeeds in provoking you, realize that your mind is complicit in the provocation. Epictetus. You might be thinking, Mark, what the heck are you on about? That doesn't make any sense at all, because we're here for trading, right? But the reason is that I include this stoic quote is that we sometimes feel the market has harmed us. We've been stopped, we've missed a fill, we've had a partial fill, whatever it may be. And in reality, we have control over our response to the market. And the market doesn't care about us. I'm not going to go off on a massive tangent here, but the market doesn't care about us. The market's not there to insult us. But very often we feel like, I'm going to get revenge on the market, or I don't like this. And there's an anger towards the market, towards price, towards them. People categorize it as them, the market. And there's no them, guys. It's just us trading against price, a group of people. They don't care about individuals. So something to maybe think about is to think that it's your mind framing that as a negative. And in fact, if you can get used to I'll call it the kind of shoulder shrug, right? You don't care what the outcome of each individual trade is. You don't care what the outcome is. You just trade you trade your plan, you execute. You don't think about anything else. And then you analyze and you try and be as objective as possible. Yes, we can't be completely emotionless, but just be careful what framework you're looking at the market at and what emotion you're tagging onto it. Okay, it's a long-winded thing, probably a separate topic completely, but I do like the Stoic quotes. All right. So today, what is overtrading? Why is it so detrimental? What are the symptoms, potential triggers of overtrading, and some tactics that I'm going to run through that you can try out if you're overtrading. Circuit breakers, visualization, pain. It sounds worse than it is. I'm not suggesting physical pain, accountability partner types, affirmations, and discipline, muscle work. And we'll go deep into those in a moment. We've got about 45 minutes, about 40 left. Sometimes some Q&A at the end. If you want to get your questions in, you can do. There's a questions section somewhere in your GoToWebinar app, and the quicker they're in there, the quicker we can get to them and stuff. And I appreciate all your questions, by the way. There were some great questions. You're a great crowd. The guys who are coming regularly, and if you're new here, you can ask whatever question you like, and I will try my best to answer it. And generally, if I can't answer it, because I don't know everything, I don't claim to know everything at all. Market's been kind to me over the years, but I definitely don't claim to know everything. I will try and push you to somewhere or some resource that might help answer that question for you. Okay, so let's get started. What is overtrading? So we need to define what we're talking about here before we go into starting to fix things. It's huge for day traders. Let's not beat around the bush. I think this is the most important thing to make sure you've mastered, because it's a broad term, but really it's trading anything that's not included in your plan, or any substandard setups, or any substandard strategy. So anything you've got in your plan that you deviate from, you go off piste, you trade something that's not really something you wanted to trade, that's overtrading. So if you've ever traded something chased a little bit, and you've got a little bit, paid a little bit more than you wanted to, if you've seen something and gone, oh, I think that's a buy, and you've bought it, and it's not really a strategy or setup that you like to deploy, then you're overtrading. Now that's minor, and you can probably get away with that. But sometimes we have a problem where, we're trading multiple times and it's nowhere near in our plan, and we get sucked into it. It feels like our brain gets hijacked. We're in the trading day, you're watching the 1 minute chart, 3 minute chart, whatever it is, trading away. You kind of grab yourself and go, whoa, why was I trading that nonsense? There's nothing to do with my plan. I've just got sucked into it. And we feel like literally we have been hijacked. And we sort of come around and go, whoa, geez, what's going on, man? What was I trading? That's overtrading, and we can cure that. We can fix that. It's something that can be mastered. And if you think about it, how much better your trading would be if you have mastered this. This used to be, guys, this used to be a horrible nemesis of mine. Overtrading, trading stuff that was just had no business trading. The strategies were effective. When it started to get edge and started things working, those years ago, I don't want to say 20 years ago, slightly less than that probably, but that sort of order of magnitude, things started working. I'd ruin it because I'd end up doing stuff that was outside of my plan. But then I just realized I must just stick to the plan. I deployed some of these things I'll share with you in a moment. And it kind of makes you feel more confident, right? So more comfortable, more clarity, because you're trading, alignment with your plan, and you're not kind of getting seduced by market movement. Oh, it's a little spike in a candle. Oh, that's how it's going to hold. And you make up a narrative for why you should take the trade. And that's not really the way to operate, right? You're taking trades that just aren't that good. And thinking about it, if you read any trading books, Market Wizards come to mind, but any trading book where it's it's maybe a tale of a trader who's done very, very well, or a story of a trader, or anything, everyone says this, from 1930s Jesse Livermore to modern day, traders who were trading different products, different instruments, new products, new instruments, and the current market conditions, right? It's important, and everyone suffers from it from a different perspective. Some people really overtrade, it's such a bad nemesis. Others, it dips in and out, but it needs to be cracked. It needs to be sorted. And the thing is obviously, why is it so detrimental? Now, obviously, there's a P&L impact, right? But you and I both know that's not really the big damage. That's not really a thing that stings. When you take a trade that you didn't want to take and you lose a bit of money, you don't care so much about the money. It's more the fact that you broke the rules, and it's more the fact that you're annoyed and frustrated that you did that. That's the real knife twister. It's not the losing the money. It's like, okay, fine, you'd rather not, but that's not the thing that really is twisting that knife and really forcing it into you. That's a bit graphic analogy, but you get the point, right? It's not that, it's the emotional impact of that stings the most. And then the knock-on effect is that you can cause tilt. And tilt is when you're just going crazy, right? You're just trading any size, any product, any instrument. Then I just want to get money, and you just focus so much on money. You're just a wild gambler. And you can go into that tilt, and you can do some massive damage if you're not careful. it's a catalyst for those stronger emotions. So you kind of think about, you break the rule, you overtrade, you get frustrated and annoyed at overtrading, then you take another trade, then you get annoyed at that. Before you know it, builds into anger, shame, all this type of really negative emotions. And if you're there at your computer and you're executing when you feel those emotions, you're in big trouble, man. You just can't do it. You're not allowing yourself to operate efficiently and effectively. You're operating from a real knee-jerk reaction state. So we need to fix it. And you don't want to get in this cycle of pain and bad trading, because listen, guys, as tough as trading is, right? And it's tough, right? It's tough, but it should be an enjoyable journey. Right? It should be an enjoyable journey. And we shouldn't look at it so negatively, going, oh, it's just not working. It's not this, it's not that. That's fine. It's not going to work for a while, but try to put it in a different light and say, hey, yeah, it's maybe I'm not doing so well in my P&L. Maybe things aren't as I would like them to be, but ultimately, you know, you don't want to have pain. You don't have a cycle of pain and frustration. You just want to cycle off, okay, I'm going to adjust. It's not working. I'm going to adapt and elevate your kind of emotions about it, because then you just move forward a lot quicker, and things won't be so meaningful when they're not going your way. Okay, so let's think a little bit about the symptoms of overtrading. Why do we overtrade? Because we go back and we go, okay, we're agreed it's detrimental. We're agreed that we don't want to do it. I think if you're on the call here now, you're on the webinar, you don't want to overtrade, right? You find that it may be an issue in your trading, you want to fix it. So great, you're here now, let's fix it. Let's sort it out once and for all. But let's think about why we're overtrading. Because I like, when I fix a problem or I kind of analyze a problem in trading, I like to go as deep as possible and dig out the root of that. There's no point in just chopping off the top of the weed, right? Because it's going to grow back. We need to go right down and work out why it's happening. And overtrading, I believe, is a desire to undo something painful, a painful feeling. And you're like, well, that doesn't make much sense. Well, let me explain what I mean by that. You know, something is triggering you in that moment to take a trade that is outside of your trading plan, right? That's the overtrading. We've kind of agreed on that before. But why? Well, why? Why are you doing that? There is something that is triggering you to say, hey, I need to undo a painful feeling. There is something, you know, I've got an urge. There's the urge there, right? And the urge is normally to combat something that doesn't feel right. Okay, and it's many things. We'll look at those in a second. But if you can identify that trigger, then you really are nearly there. You can stop yourself from getting into the situation before you get triggered. Because what we don't want to do is we don't want to say, okay, how do we stop overtrading when we're in overtrading? We want to stop getting into the situation that causes overtrading. You see the subtle difference? We're overtrading. Yeah, fine. Let's have a tactic to stop that. We need that. That's the kind of last fallback, if you like, to stop things. But we need to work out why we're overtrading in the first place, and then figure out how to avoid getting into that situation. I'll explain more. Let me kind of go a little bit deeper and make put a bit more context onto this. So, you know, you very rarely will you go into a trading day having had a green week. Let's say you go had a green week, you feel cool, you feel comfortable, you feel calm, you feel confident. Very rarely at that point you just start punting away and trading on SPY or all this stuff. You just don't do it, right? You're generally quite calm and you feel quite relaxed, and you're waiting for your strategies and your setups, and you execute as you should do, with calmness and patience. But now you add a few more things into the mix, right? Maybe you got stopped out twice early in the morning. Maybe you missed a fill. Maybe it feels like, yeah, I'm red on the day. I really want to end the day green. I need to make some money. I'm not doing so well. My equity curve is down. You know, I feel like I've been doing this for a long period of time. Whatever it is, you start to get something that just starts to creep into your brain, right? Is that one trade? Is that, as I said, combo punch of everything? There's something, right, that triggers you. And I did a video a while ago when I talked about the rule of three, right? Because for some reason, if I get quick succession, 3 stop outs in a row, that annoys me. It shouldn't do, because I've been trading 2 decades plus, but it damn well annoys me. And so I just accept it and go, you know what? If I get stopped out 3 times in a row, quick succession, I'm done, man. I am done, because I'm deadly. I'm a deadly trader, and I know that. It's just something that frustrates me. I just recognize that that's a weakness. And what is it for you? Is it something that, you know, if you've been green for the day, and then you kind of do a couple of trades and end up red, does that frustrate you and make you want to get back into green on the day? you know, if you miss a fill, partial fills annoy me a little bit sometimes, but if you kind of get half a fill, you get stopped out, it goes your way. Is there something, right? So we're trying to work out something you can do, and kind of after this and think for yourself is, you know, when do I get frustrated? What really annoys me in the market? And kind of sitting there with a notepad and pen and going, you know what? That really annoys me. I really hate getting stopped out 3 times in a row. I hate missing my fill. I hate getting an early loss right off the bat. I hate going from, you know, green to red. I hate whatever it is. And that then becomes the seed of what we're trying to cure, and go, okay, we're not trying to cure, but we're trying to be aware of it and going, okay, if that annoys me, I know that could send me into overtrading. And other things kind of to think about, which I wanted to mention, is the over focus of the short-term outcome of one trade, not the long-term goal. And this is a big one. This is probably a complete different topic, and maybe we'll address it at some point in the future. But as traders, you know, I like to think that, you know, as we staking our identity on the outcome of one trade is a recipe for disaster. How many times have you gone, right, this is the trade, I prepare for this, I take it, it's so important, and you put so much importance on it, and when it doesn't work, you're like, oh, it didn't work, you're frustrated, and this and the other. And that is the real recipe for disaster, guys. Honestly, if you can reduce that, that will revolutionize the way you trade. If you can stake your kind of flag in the ground and reputation, if you like, on process and on long-term goal, that would be so much easier, and it will eliminate some of these feelings you had, like from that previous slide, when you get stopped out, you missed a fill. It won't matter to you so much because you don't have so much importance staked on the short-term outcome. So if you can kind of step back a bit, look around and go, this trade is just a meaningless trade in the sea of trades I'm going to do over my trading career. Just relax, man. Just take a step back and just drop the shoulders again, do the shoulder shrug. And if you can rewire that in your brain, then you're in a much, much better position. So something I wanted to add, because that really is a cure all. That's a cure all, because the reason we get so you know, annoyed at being stopped out, all these type of things. We're human beings, right? We need to accept that some things are still going to frustrate us, but if we can just relax a little bit and not stake so much importance on an individual trade, that just really alleviates this. And then it tends to not push us into overtrading. Going back to the topic, it tends to not push us into overtrading because we don't trigger an emotion. Okay, so now we've gone through that, and we kind of look and say, right, okay, we kind of understand, you know, what overtrading is. It's taking substandard setups. We understand that there's a trigger for overtrading, which is some kind of emotion. And then we have the emotion of frustration, and we go, right, I've been stopped out. I want to go back to where I was before my P&L. Let me trade quickly now. Let me make a quick trade. Let me take this break out. Let me take this easy trade. I'm annoyed that I know I've lost 2 in a row. Let me get back to green. And there's an emotion, and normally it's to get back to a previous state. You know, we said that it was a negative emotion, but it's normally something I want to overtrade because I need to get some money. I need to get, whether that's to get back to a previous state, whether it's to get our equity curve going, or something. You believe that in order to do that, you must trade. And of course, that's a false narrative. We know that many times sitting on the hands is exactly the thing to do. Okay, so I think we've cleared that up. Tactics to try. So the one thing that really works well is kind of a circuit breaker, right? A circuit breaker. And this is when you go, okay, listen, I'm just every hour or every 30 minutes, depending on the time frame we're trading, I'm just gonna sit back. I'm just gonna pace around my office, and I'm going to just observe myself. And what does that mean? It basically says, hey, listen, at a specific point in time, right, to avoid getting too sucked into conditioned and too sucked into short-term outcomes, I'm going to take a step back, and I'm going to just have a look and observe from a bird's eye view, and observe my trading and myself and my actions from a bird's eye view at set intervals throughout the trading day. There's an app called Be Focus Pro, which I do have on my phone. And you don't need that. You can use any app, any sort of timer. But it basically says, okay, there's a 1 hour time. You can set it to say a 1 hour timer and then a 5-minute rest. So it goes ding, and then it gives you a 5-minute timer. So you kind of have an hour, and then you have 5 minutes just to reflect. And the reason we do this is because we are all the same, guys. We all get sucked into that short-term price action, or the chart's there, and we get so focused, and we need something to, and that is what causes the overtrading, because we're so focused, we're so worried about the next 1 minute candle or 30-second candle, whatever we're doing, that we don't step back and go, hang on a second, let me just relax a little bit, drop the shoulders, breathe, look at my plan, refresh. What am I doing? What's the objective for today? Hey, I'm trying to get short on the high. Why am I trying to chase it long if I'm thinking of waiting for the short? Okay, it just recalibrates you a bit. So very easy to do, acts as a circuit breaker, and just quick reset. Pomodoro technique, and that'd be Focus Pro. I think there's a free version stuff anyway, but you get the point. Just it's that timer, and then some period of time where you're reflecting and you're recalibrating. Another good one for a circuit breaker is a certain number of minutes after you've placed a trade. Really, really good this. I think that many traders would absolutely see a huge change in the P&L if you just waited in between trades. If you just went, hey, after I placed a trade, I need to wait X number of minutes. Because how many times, especially with day traders, you probably are here, how many times you take a trade, you come out of a trade, you take another trade very quickly. Maybe you get stopped to go back in again. Maybe you exit a trade too early, go back in again. Maybe you take a trade, you just get yourself in a mess, and it's overtrading. So easy way, again, circuit breaker. Hey, after I place a trade, don't start a timer. I can't trade again for now 5 minutes, 15 minutes, 7 minutes, whatever it may be. And it's just calibrating you again to thinking and resetting and just calming everything down. And now you might say, hey, Mark, I'm a scalper, right? It doesn't apply to me. I'm a scalper. I need to scalp. I need to be in and out of the market quick. I can't be taking minutes break. That's going to ruin the whole thing. I get it, right? I understand. If you're a scalper, then thinking in terms of sequences, right? So what I mean by sequence when you're a scalper is, I would have thought that most people who are scalpers really focus their attention in one specific environment. What I mean by environment is a kind of market condition, as in, hey, the market's flushing through a low, you're there scalping, the kind of breaks through, the pings back, all that kind of stuff, the break. You're trading that little nuance and little flushes and little goodies around that little area. And then when it starts to chug away again, you're leaving it, or if it breaks through, you're leaving it. But you're trading around a certain pivot point, whatever that is. Whether it's exhaustion move, there's always some focus there in the back off a bit. So, when you've had that sequence, then just apply the circuit breaker. So if you want to trade like 4, 5, 6, 7 times, you're trying to job around a little short-term price action tape read, that's cool, that's fine. That's your strategy, then great. But then after you've done that and the price has gone to a new sequence, maybe it's gone to start, let's say, chugging away, maybe it's doing this, maybe it's calmed down, whatever it may be, then you apply the circuit breaker. Then you take a little break, 5 minutes break, and go, okay, fine, relax, everything good. Everything's good. No overtrading. No, good. It just helps to bring things into perspective. Circuit breakers are really, really, really great tactic to deploy, honestly. The other one is using limit orders, restricting the number of trades in a day, restrict trade direction to either long or short. I can't gloss over this without pausing for a moment. This is another thing that is super, super effective, and it sounds the most stupid thing to most people. They're like, well, it's ridiculous, man, it's ridiculous. But honestly, if you're focused on just one direction, you don't have to, you're not going to end like this, right? Everyone sort of has this friction and go, I don't want to do that because I want to be able to trade long or short, and I don't want to be able to just restrict myself. This is just to cure something, to fix something, to improve yourself. The trader you end up being isn't the trader you end up trying to be in the next 30 days, right? So don't be afraid to take a step back. Don't be afraid to peel things away and put them back in later. If you just trade, you say, hey, I just want to trade long today. The market conditions are strong. The trend is up. I'm looking for longs at support, or I'm looking for longs at sort of exhaustion flushes to the downside. And you might be like, yeah, am I going to miss some stuff? You won't, because you're going to be so focused just on either long or not. And it's easier than saying long or not or short or not. You're just halving the cognitive load, and it just helps you slow things down again. So you say, hey, listen, I'm going to take 5 trades today that only give me on the long side. I'm going to use limit orders again to put a little circuit breaker in, because how many times? I mean, listen, be honest here. Do you use market orders? And I would guess the majority of you would say yes, I use market orders. If not 90+% of you, and there's nothing wrong with that, right? I'm not saying don't use market orders, but if we're trying to fix that impulsive overtrading habit that you have, why not calm things down a bit? Use a limit order, because a limit order takes time to put in. It takes time to get filled unless you're putting it above the market. And it's but of course we can game the system. But what that does, it says, hey, market's kind of pushing up. Hey, I want to bid at 50. Market's looking at 60, 65. Yeah, I don't want to get long, but I just want to kind of bid at 50. If it goes to 70, I'll put up to 65. I just want to bid like 10 under the market, 10 ticks on the market, or $10 on the market, whatever you're trading. And that just helps you decide if you really want the trade. It just helps you, again, add that little friction, pump the brakes a little bit, use limit orders. And these things, you know, altogether then just slow things down a little bit. When you slow things down, you start to think with your trader brain rather than the impulsive brain. And you can think with your trader brain, which is actually probably quite a good brain. It's quite knowledgeable, quite skillful. And you use that part of the brain rather than the impulsive chimp side of the brain, then you're not going to fall into overtrading, or you're less likely to fall into overtrading. Like I said, scalpers thinking those sequences, however many trades you take, that's fine. You're okay to be active. But when the sequence is done, whoa, step back very, very clearly. Boom, step back, take a breath, and analyze. And the objective here, guys, is this. And people go, "Ooh, again, it's like a bit of a wince when I say this." You're aiming, if you're an overtrader, let's be frank, if you overtrade, you're in trouble. You know you've got to fix it. You can't. You know when you look at your results, and you're looking at your P&L, you look at your journal, and you're going, "Hey, man, I'm trading too much." You know that you can't continue to trade like that. And so you've got to go, right, I need to do something critical. I need to do something. I need to do a nuclear option here. And so you aim to overshoot back into under trading. So if you're over trading, you go, right, I need to be very, very mindful about the trades I take, be very careful and very strict, restrict the number of trades, maybe just go long or short on the day, use them, all those tools, put my timer on, all this kind of stuff. And then you go, right, that's better. I've had a week or two where I've just traded very few trades. They've all been clean, crispy setups, as Peter says. They've all been nice. They've all worked well. When I say work well, I'm saying you're not going to get 100% winners, of course, but they've worked well in terms of how you've perceived it in your plan, right? You felt good, you felt comfortable. And then you get comfortable not trading. You know, no position is an absolutely perfectly okay position. And so when you do that, and you look and you have a month and you go, hey, you know what? I haven't overtraded. That's good, man. I've not overtraded. I've just traded according to my plan and structure. And I've not got sucked into the market. The market does not rule me. I decide when to allocate my hard-earned risk capital. And when you get to that position, it's a lovely place to be. Then you can increase your trade frequency. Then you can say, you know what? I'm going to trade a little bit more. I'm going to up the size. I'm going to up the size of trade, or frequency of trade, should I say, a little bit. I'm going to play that game. And you try to get it right in the middle. So if you're on overtrading at the moment, aim to undershoot, to undertrade, that's okay. Run there for a bit and then put that dial back. And then that's the perfect position to be in, right? You're trading frequently enough for your edge to play out. You're not getting sucked into trades you don't want to take. And you're not sitting there twiddling your thumbs all day long waiting for one specific setup that might never come, right? You want that sweet spot, okay? All right. Oh, we're on 1-2 already. Okay. Tactics to try. Now, I'm a big fan of this. You know, if you've been here before, you know I never was, but it worked for me. And I was like, okay, I've got to admit, it sounded a bit woo-woo, but it works, okay? Practice in your mind, visualization, by the way, visualizing stuff. Practice in your mind the whole process of not overtrading. So this is probably, again, another whole topic, but very briefly, what you want to do is to think in your mind of a situation that sucks you into overtrading. What could that be? Let's use a 3 stops analogy. You stopped out 3 times quickly at the open. That's annoyed you. You're annoyed, right? So put yourself in that mind. You've been stopped, you've been stopped, you've been stopped. Feel the urge to trade. I want to get the money back. I want to get back to where I was at the open. I felt good at the open. I was ready for the open. I was ready prepared. I was done on my plan, and now I've ruined it. Now I'm almost stopped out for the day. How annoying is that? Frustrated. Feel it. Get it brutal. Let it really resonate with you. Man, get so frustrated with it in your mind. And then rehearse your response. So your response is, right, I'm annoyed. Oh, God, damn it. I want to trade. I'm going to trade inside. I'm going to get this money back. So what's your response? Your response is, hey, I'm walking away for a bit. I'm not getting sucked in. I will not be commanded by you and my emotion. I will take charge. And rehearse that in your mind again and again and again. And you're rewiring your brain then to act in the way that you want to act in the heat of the moment. This is powerful. This alone, if you can master this, what you're doing is just giving yourself loads and loads of reps. And I always say this when I'm chatting with traders one-to-one, when I'm, on the calls, or I'm thinking to myself, I always say, hey, try this, just try this, because we don't want to be, in the battlefield straight away and go, oh, you're supposed to do this and do this. We want to test ourselves, and we can't do that unless we, have that emotion, that feeling. A demo doesn't work for this type of stuff. Demo's got a great place, but not for this. So try to put yourself and your mind in a position and then act in the way that you want to act. It's super powerful, this, and it's free. It's free. You can do it whenever you want. Wrong way. Okay. Number 3, pain. not pain as in taser into areas you don't want to be tased, but something a little bit less painful. But this can work, right? If you have something you're like, hey, I don't want to overtrade. Define what overtrading is to you first. Is that X number of trades a day? Is that whatever? You need to have a definite kind of point where you go into overtrading or not. One thing I know one guy did, he gave money to his least favorite political party. I always get a chuckle from this one, talk about this, because you imagine whatever political persuasion you are, flip that on its head and imagine you going and giving £300, £500, £1,000 to that charity. You would feel pretty like, oh, ouch, that hurts, that really stings, it goes against what I believe. Or if you're not political, something that goes against, what you specifically stand for or believe in. And have that as a penalty for if you overtrade. So you say, hey, listen, if I don't overtrade, or if I'm allowing my, let's say you say, okay, I want 80% of my trades over the next month to be in line with my strategy and in line with my rules, i.e., let's say 5 trades a day on these instruments, this, that, the other. And if you go over that and you trade more than 20% of your trades, or 10%, whichever number you do, are off-piste, then you have to pay the penalty, pay the fine. The fine is you go out and you give your money to whichever is your least favorite charity or political party. Make someone else pay for your error. That's another type of thing you can do. Here's one which you can do is say, hey, put 500 quid in a pot, £1,000 in a pot, whatever kind of is meaningful to you, and tell someone they can have it if you overtrade next week. Not somebody who's like your child or your spouse or something, because you say it's fine, here, have it. But you want to give it to somebody who, maybe it's a mate, maybe it's somebody who like laughs about it, and you don't really want to give them 500 quid. All right, they're a mate, but you do. I mean, if they're in need, you would do, but you don't want to throw around £500. But the point is, they can get on board with it, and you can have a bit of a laugh about it, but still, you don't want to do it. And so what this does is it kind of says, hey, there's a penalty. And all you're doing here, guys, is adding penalties. Maybe penalty was better than pain, but you're adding penalties in, some kind of fining system to help stop you overtrading. Because if you were trading prop, or if you were trading in a hedge fund, if you went off-piste and traded outside of your remit, what's the penalty? Penalty is you're gone. You're out the door. You don't get a chance to mess around and do stuff that you're not allowed to do. The rules are the rules, and you're gone. And so you need to, and that helps people stay and they don't get sucked in, because they go, hey, I'm not going to take trade in this market because that's not what I'm supposed to do. If I do that, I'm done. I'm ruining the whole thing for the one impulse. And sure, some people do it and they're gone, but adding that consequence to the behavior is something that you can try. Accountability partner, number 4, accountability partner. So I think this can be very valuable depending on how your relationship is with, let's say your husband, your wife, boyfriend, girlfriend, whatever it may be. You can bring them on board and say, hey, I'm really trying to crack this. I'm really trying to crack this. It's overtrading, maybe no explanation, but this is what I'm doing. And I'm going to show you every day or every week kind of the trades I've taken. You can go into as much detail as little detail as you want, but I promise to do this, and I want you to look at it and see this is what you're looking at, how many trades I've taken, and I'm going to do this. And sometimes just having that, that you're accountable to someone else matters. Now, if that doesn't work for you for whatever reason, buddy system, trading buddy. That's why we have the buddy system on Traders Mastermind. We do that once a month. We kind of pair people up with different traders and go, hey, you're an accountability partner, you're a buddy. You can kind of have that private accountability as well as the group accountability that we have on the calls and stuff. But it's just having that other one person you can privately DM and go, man, I slipped up today. Right, get yourself back in shape. I want to see by the end of the week that you aren't slipping and trading outside your rules. So mentor, buddy system, husband, wife, a fellow trader, accountability partner just helps you. We know what it's like, guys, when bizarrely, when we're doing something for ourselves, we break the rules, we kind of allow ourselves a little bit of leeway, there's not much downside to it. When you're doing it for someone else or with someone else, you feel like you've got to show up. It's like if you're training in the gym with someone, if you're meeting them there, you're going to go, right? You're not going to go, I can't bother today, I'll go later. You can go, that guy's waiting for me there, I'm going. And so, that's the same type of thing. Accountability partners that have been used in all sorts of walks of life, a very valuable thing if you can do that. All right, so did we miss one? Actually, we did. There we are. Affirmations. Okay, I like this kind of stuff. I do. I will not overtrade. I don't want to hear you going, and this sounds like I'm Yeah, telling you what to do like a teacher. I didn't mean to say it like that, but I don't like it when people say, "Oh, I'm just gonna look in front of the mirror and go, I will not overtrade. I will not overtrade. I will not overtrade. I will not overtrade." And trying to drill that into your mind, these so-called affirmations, is complete beginner nonsense stuff. It might work, but its chance of it working is nonsense. It's just absolute. Your brain just sits there and goes, BS, 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 yes, BS. You know it is, right? If you stand in front of the mirror and tell yourself, "Oh, I'm ripped with a six-pack," and BS, BS, you just ate a chocolate cake, BS, BS. It doesn't work, does it? You need to go a little bit smarter than that. And you guys are on the webinar, so you're smarter than that. Work out the trigger. That's why we talked about the trigger. What's the trigger for setting you into overtrading? That's the key. And then the affirmation is to solve that. So if you worked out that your trigger for overtrading is, after 3 losers, man, I start to just punt away and hope, then you just affirm, I will stop trading after 3 losers. You're affirming an action, something that's very, very easily measurable. Not I will not overtrade. It doesn't work. It's like, hey, okay, let's go upstream. Let's look at the trigger. Hey, I don't want to trade after a loser because I have a propensity after a loser to trade something and dive into things. Hey, when I go from green to red, it really, really annoys me and I end up overtrading. So, hey, when I go green to red, I'll take an hour break. Go upstream and work out the trigger and then work out the action you want to do to not get you into overtrading in the first place. Go back to the first couple of slides we're talking about. That's the trick. The trick is not to just blanket go, "Oh, not overtrade, overtrade." It doesn't work. It doesn't work. Well, hey, I never ready to say nothing doesn't work, because I'm sure there might be someone it's effective for, but I don't think that's as effective as saying, hey, this is the thing I want to do. I want to walk away after I've had 3 losers. I want to walk away if I had a loss straight at the opening bell, whatever it may be. And that then stops you from getting into overtrading. Something like we talked about this a few webinars ago, actually, acting in alignment with the vision of my future trading self. I was on a call with a trader the other day, and we're talking about different things I wanted him to work on. And he said something which encompassed all of it. It was like, hey, I just want to trade professionally. It's like, damn it, you've got it. You need to go through all the little things that we're trying to get you to do. Just keep running that filter in your mind. Is this a professional active? Is this the active professional trader? Am I trading in that manner? And professional, I mean like experienced and seasoned, and someone who is really thinking carefully and clearly about the trading. That's the definition to me of professional. And so that came from him, and he was saying, hey, that encompasses everything. That was a great way of kind of looking at things, I think. How long we got? We've got a few minutes left. Okay, great. The sixth thing is to really just improve your discipline muscle, right? Do something outside of trading that flexes your discipline muscle. Those of you who listen to the podcast, the Traders Mastermind podcast, every Friday, I had to think for a second. Friday we will relaunch it. Obviously, I record it beforehand and it's all set up and posted and stuff. But this Friday coming up, or when you've listened to this, there is a chap who has really turned the corner with his trading. He's been trading for multiple years, struggling, and it's working out for him. He's green, it's profitable, it's good, it's working. And one of the things that he said, which was super interesting, is he does so much stuff outside of trading to improve his discipline. So he talked about doing like a really aggressive ab workout. He talks about the cold shower thing. I'm not going to say any more about that. The cold shower thing, just things that really, really force you to get your mind in shape and force you to be acting in a disciplined manner. So the idea, we talked about this before, so I'm not going to go crazy about this, but the idea is that you do something outside of the trading arena that flexes that discipline muscle, so that when you do want to stop after 3 losers, or when you do want to take a break, or when you do want to walk away, or when you do want to do the hard thing and not get seduced by the market action and the desire and the emotion and real pull to trade, you can go, no, absolutely not. That's not me. That's not how I am. That's not how I conduct myself. I will not trade, and I will not do something I said I am not going to do. I will not fall into that trap. And that just helps you, because that's a stronger muscle. And honestly, once you just flex it and you get it bigger, like any other muscle, it becomes easier and easier to a point where you won't overtrade. Like if you won't do it. It's just something you're not even going to bother doing. Oh yeah, fine. Before we get on to the kind of summary, guys, you can write a contract with yourself. Write a contract with yourself. Say, hey, I, Mr. Day Trader, agree to whatever it may be, right? I've got one here and you can download it if you want to download it. You can make your own. Where is it? It's tradesmastermind.com/contract. You can download this copy, but make your own. You can make your own, right? If you want to, if you nick this, I don't mind. But the point is you have some kind of contract with yourself, and okay, this has no meaning and no legal binding, right? Of course it doesn't. But what it does is it makes you think, hey, I'm just thinking, and what it does is it elevates the importance of this. It's like, hey, this is so important. I've written out a little contract with myself. I agreed to do this. I agreed to not take more than a number of trades today. I agreed to walk away. I agreed to do this. I agreed to do that. And you sign it and date it. And your mind says, gee, what's he doing, man? He's like writing a contract. Okay, he must be serious. Okay, so when you kind of in the position where you feel like you're about to overtrade, you feel like you're going to get sucked into the market, as stupid as this sounds and as meaningless as it really is to anyone looking in, you go, that was important. Your subconscious goes, that was important to him because he thought he wrote it down. Okay. And so all you're doing is you're trying to constantly pull yourself back into thinking in alignment with the trader you're trying to become. And that isn't a trader who overtrades, is it? It's not a trader who just takes trades on a whim, sees the market spiking, goes, I want to get long, it's going to get long, and I realize I'm going to miss it. It's not that trader. You're not that trader. You're a trader who acts calmly and is a general and is, looking on the battlefield and deploying his risk capital in the right places, not just on the front line, just you're calm and you're confident and you're executing, you've got your stopping, your risk, your reward, and you're playing the game from an elevated position, a bird's eye view. And that's the way to conduct yourself. And little things like this just help. All right, so let's go for a summary. By the way, where can you get that? tradesmastermind.com/contract, but you make your own. If I don't need that one, but if you want to steal it, feel free. PDF, easy. Summary. Whatever you do, you've got to fix overtrading. If you overtrade, you've got to fix it. It's not sustainable. And that's that. Going back to that Stockdale paradox, I think I mentioned it in the daily email and maybe in the podcast. It's so important that you have to be brutally honest about your current situation, but be so optimistic about where you're headed. And overtrading is something that just has to be fixed. It is. It's got to be fixed. So whatever you're doing, don't worry about scaling. Don't worry about adding size. Don't worry about adding to positions. Don't worry about running winners. Don't worry about all that fun stuff. Fix this one thing. Fix the overtrading. You can't be consistent if it stays a major issue. It's your kind of opportunity, fork in the road, as I often say, to step up and fix it and say, no, I don't overtrade. I'm not a trader who overtrades. I'm not a trader who overtrades, should I say. And the thing is, with consistency, persistence, determination, you can get to a point there, like I said a couple of slides before, once it's gone, it hardly ever comes back. And your weaknesses. You go, hey, you know what, you little sneak. I know at that point in time, you make me feel a little frustrated when that happens in the market. So I know to step away, let it dissipate, come back, full force, attack it with the clarity and confidence I know I've got. So you want to be able to conduct yourself in that manner. So if it's something that's bothering you, deal with it, fix it. Hopefully those strategies and tactics will help. If you need any other help, of course, around, you can reach out to me and I will be more than happy. If you've got any questions, ladies and gents, then now is the time. We have about 15 minutes, 10 minutes, 5 minutes. If there's none, that's fine. If there are, give it a few minutes and let them come in. What's this say here? My connection was really bad from Mr. Webinar. I'm sorry to hear that. Is there a way to access the recording? Yes, the recording will be emailed to you. I'm pretty certain that is how Pepperstone will deal with this. The recording will be emailed to you, or a link to where you can access the recording. And you can kind of go through it at your own leisure. Peter's put, and this is a really good point actually, Peter, which I should have probably included, trading the higher time frames can reduce overtrading as your strategy appears less frequently, slows you down, then go back to lower time frames. That's an absolutely excellent piece of advice. Those who don't know Peter, who does our Tuesday call and Traders Mastermind, let me go back to tactics. So this is a kind of extra level on the circuit breaker, in that rather than sitting here and completely focusing on tick, 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 market going up and down and getting sucked into the market, you go, hey, listen, do you know what? I'm just going to trade on a higher time frame. And like Peter said there, You don't have to stick to that. There's such a friction, like day traders going, oh my God, I don't want to become a swing trader. Oh, I can't go to a daily chart. I'm a day trader, man. I'm a day trader. You have to stay there forever if it's that, if there's that much of an issue. But what it does do is just slows you down, calms you down. And as Peter says, you just relax a little bit. Say, hey, you know what? I'm going to swing trade for a week or so. I'm going to take some setups and strategies, just elongate the time frame. There's channel breaks, there's opening range breakouts, and it's type of stuff that you can get on Trading Plan Pro. Any of those setups that can be used on a higher time frame, and just calm things down a bit, and just run like that for a bit, and just realize what life feels like without over trading. Yeah, it's a great piece of advice. Okay, I'm showing you on the screen here, by the way. I'm not ignoring the camera. How many years did it take you to discipline? How many years did it take me to become disciplined? Oh, you know what? Too many. I've been trading 21 years now. No, 22, 2003, aren't we? 22 years now, starting 2001. And for the first 2, 3, probably 4 years, my discipline was poor. Honestly, it was poor. I got away with it actually because I had a good edge. I'd identified a reasonable edge towards those latter half of those early years, and it would have been much quicker if I had just focused on the discipline early. But I put my hand in the fire so many times and been slapped around the face so many times that I was just like, listen, I remember looking myself in the mirror. I remember actually doing that. I remember where it was. And looking myself in the mirror and go, you have to stop this behavior. If you want to get to where you want to be in trading, you are going to have to sort this out. You have to stop the rot. And I was talking rot as in the P&L drop. And the thing that's really causing you the damage here is your propensity to overtrade, your lack of discipline, and sizing was a big issue for me, because back then you kind of had loads of margin to play with, which was deadly, loads of rope, and so you could trade like huge size on a modest account. And that was something that I was like, listen, you've got to stop this. You've got to stop this. And I've talked about things I did to kind of focus on that, but it takes time. But the good news is, like, regardless of how long it took me and others, is that even if you started out now, I don't know how long you've been trading, but if you focus on this relentlessly, and I mean relentlessly, like do not even bother about what the market's doing. Don't care. Don't try and get a good trade. Do none of that. Don't worry about P&L. But if you focus absolutely your every ounce of being on this issue, on the discipline, on the determination, and determined to do it, then it will shortcut things massively, because you won't have to deal with it later. There's nothing worse than having a chink in your armor. Maybe you've made some money one year, maybe you're doing all right, and then that thing pops up again. And it's a discipline issue, and you're trying to scale up in size and your discipline's off point. Deal with your discipline now, get it sorted. And just by the nature of the beast and nature of trading, you don't realize that discipline and over trading, all this stuff is a thing to look at and a thing to fix until you're probably 6 months in 1 year in trading, because you don't kind of realize it. You just say, what's going on? And then you kind of dig around, and like you're kind of doing some research, you're jumping on these webinars, you're learning, you're allocating time and resources to improving. So don't feel bad if it's taken you, if you're in 2 years, 3 years in, 4 years in, 5 years in. It's when you allocate the resources to fix it. Because when you make the decision, whether you're on year 1 or year 21, you probably wouldn't be still in year 21 if things weren't working for you, but you get the idea, right? You'd be say, okay, if I allocate the resources now to fixing it, I'm going to get it done. I'm not going to do anything but fix this discipline issue. Then you can relax a little bit. Of course, we're human beings, we're going to slip up, you're going to make mistakes, but it's a much nicer and more comfortable place to be. Some feedback here from JM. Thank you, JM. I really appreciate that. I'm glad you enjoyed the webinar. And the last question we've got here is just some feedback from Antonio. Thank you very much. Yeah, kind feedback, and I'm glad you enjoyed the webinar. All right, ladies and gents, I think that's it. Thank you so much for your attention. And don't forget, we will be back again 2 weeks' time for another webinar. If you're in Traders Mastermind, Peter's call in 10 minutes' time. My call on Thursday. And also don't forget that you will have an email about the Dubai Pepperstone talk streaming on Thursday. Thank you, ladies and gents, for your attention. I hope this has been valuable to you. See you next time. Take care. Bye-bye. As I scrabble around to find where the GoToMeeting quiz is. There it is. See you later.